Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh and new week. Remember, the Nifty is currently witnessing buyer's exhaustion at higher levels. This was only anticipated as the index had already rallied 1500 points in the last 15 trading sessions from the lows that we had made on September 30th. But thereafter, we've also seen that the index is down by 300 points from last Thursday's high, led by mainly the banking index that's now down by 1000 points from its own record high as well that it recently has hit as well. Now, as we begin this fresh and new week, the focus will be on global cues as well as with the US President Donald Trump now announcing deals with multiple Southeast Asian countries on his ASEAN tour as well, including Malaysia and Thailand, along with the hope of a deal between US and China, which has actually sent the US futures surging too. Remember, all eyes will also be on the US Federal Reserve meet and the big tech results this week as well. When it comes to the domestic markets, our own earnings season is also back after a Diwali lull. As many as 150 companies will be reporting their earnings in this week alone. We will also see some reactions from earnings already reported in the last couple of sessions, like Kotak Mahindra Bank, Coforge, SBI Cards. All of these results came in after Friday's market closing action as well. Now remember, for Kotak Mahindra Bank, remember largely the results have been in line with expectations. Marginal improvement in asset quality has been seen. Management, however, sees downward trajectory for both credit card as well as the MFI NPAs as well, and therefore. We also see Coforge also in focus, where the CEO has said that remain cautious on the stress in the retail CV segment as well, although the revenue growth was in line, margins expansions with a beat as well. Also, they see potential pathway to end the year with 14% EBIT margins going forward from here. So these are the two numbers that we'll be watching out for. How have the US markets panned out on Friday night, and what's the action in the Asia markets this morning? Well, on Friday, we did see that the Wall Street's major indices, they actually closed in at record high levels as investors also welcomed a cooler than expected inflation data and also upbeat corporate earnings. So we did see the S&P 500 about 0.8% higher, Nasdaq climbing by over 1%, and the blue chip Dow Jones Industrial Average also advancing by 1% as well. This morning, markets across Asia Pacific region were upbeat in the early trading action, with Japan's Nikkei 225 in fact surging over 2% to breach the 50,000 mark for the very first time as well. Investors are now cheering the progress in the US and the China trade talks and a strong momentum from Wall Street as well. Let's also look at South Korea's Kospi. That's up by 1.8%. We also have Australia's ASX 200 that's gained by about half a percent in trade. Also, as we are given to understand, the GIFT Nifty is indicated of a positive start in just about 2 minutes from now. We could be seeing about 100 point of a gap up start in the Indian markets today, back above the kind of levels that we've been seeing, above 25,950 odd levels. A quarter percent jump is what we could be seeing at this point in time. But will this sustain is a bigger question at this point as well. But let's welcome our guest on board. We're right now joined by Mr. Abhishek Basu Malik. He's the co-founder and the fund manager of Sri Rama Managers PMS, and he's joining in to share with us his views on the markets. Very good morning to you, Abhishek ji. Good to have you with us at the start of this new week. Well, we are back with a full-fledged week of action this time as well. What's the suggestion that you have on the markets? Last week, which was, of course, seeing the festive spirits fuel back into the D Street, but we were also seeing buyers' exhaustion right at the higher levels as well. For this week, what's your expectation?
First of all, good morning to you and all your viewers. See, I think last week or the last, I think, couple of weeks, we've seen a very strong rally from, on the Nifty at least, say from 25,500, 600 levels to above 26,000. And it's then normal to see a few days of correction because markets rarely go up one way. So broadly, I think we are still in that zone of 24,200, 300 odd to 26,300. So that 2,000 point Nifty range is where we are stuck. And my guess is until and unless we see the US tariff situation, get sorted out, we will not see material breach of these upper levels. So we might continue to be within this range until and unless we see resolution to the US tariff problem.
Okay, got that. We've already started to see the market stick positive end, but below the 25,900 mark, we have 25,849 with us, 2/10% higher. So we are looking at a positive start, at least at this point in time. About a 50 point of a higher start do we have at this point. Let's also pull up the Nifty Bank and also the Nifty IT index to see how these heavyweight indices may be opening in this week, a new and fresh edition of this week as well. Remember, last week again we've seen a lot of volatility on both Nifty Bank as well as the Nifty IT index as well. Let's start off by understanding what's happening there. Abhishek ji, on the Nifty Bank also, we've seen record high levels being seen on this index. It has hit the record high levels much before the Nifty has even attempted to do that as well. But again, we are seeing, the market see some profit taking at those levels as well. On the banking space, how are you looking at the current triggers of earnings really support the sentiments on the Nifty Bank, and what do you expect going forward?
See, one thing about banks is that the interest rates are going down, and with inflation in and around 1.5 to 2.5% in the last 4 months, there is possibility that interest rates are going to get reduced further. So that would give a fillip to the banking companies, that is banking, NBFC, MFIs, small finance banks, the entire sector. Now, having said that, what is also happening is we are seeing entry of global players, foreign banks coming and taking over Indian banks, which is something which is relatively new. So we are getting fresh capital, fresh management into the banking sector in companies which are not the top of the league. So there is bound to be more competition to the frontline companies, frontline banks at least. So competitive intensity is likely to go up in the next 3 to 5 years. But overall, I think the most of the problem in the banking cycle is over. So banks should do well at least in the next 6 months to 1 year.
Okay. Let's also, also get a view on the IT space. One, Coforge, of course, will be reacting to its earnings today. So, what's your sense there? Coforge has always been a poster boy of the mid-cap IT space stocks that have performed today. There is an indication in the pre-open that the stock could be opening higher by 4.8 odd percent. This time around, we've seen large IT companies, post their results also start to buzz yet again. Now it's the turn of mid-cap IT companies to come back into focus. Here, the revenue growth was largely in line with the street estimates. However, margin expansion definitely beat expectations. The company sees a 14% EBIT margin target by financial year end as well. So, how are you looking at the second quarter outlook? And of course. The kind of expectations that you would have from mid-cap IT names amid all that underperformance that we've already seen in the year gone by.
I think if you look at numbers that Coforge has delivered, this has actually been really, really good. To get a sales growth of greater than 30% is really phenomenal in these kinds of circumstances. But is it really cheap, and can you can an investor load up on it? Probably not. I mean, but it's performing uh, ahead of the pack in terms of IT, even in terms of the mid cap IT pack. So it's a good company doing well, probably fairly valued, maybe slightly overvalued as well. But that's a call that an individual investor needs to take. Uh, I think overall, if you look at the IT pack, I think again Probably the worst is behind. Things are going to get better, probably from here on. So might be a good time to keep an eye out on some of the mid cap IT names. I am personally more positive on the mid cap IT sector compared to the large cap IT.
Okay, fair point. Let's also take another view. That's also as far as some of the other key sectors are also concerned. Abhishek ji, when we talk about the earning season, that's already now gathering some more pace. So far, has anything stood out for you as an outperformance?
I think if you look at discretionary spending, right? So ITC hotels, I think, came out with their results. Again, quite good results. It's the entire and this is the season where I think uh, hotel con hotel occupation, etc., will go up. So uh, post COVID, the entire travel and tourism industry has picked up significantly. People have started traveling much more. It's now become more a lifestyle kind of a change. The other very important thing to understand and sort of notice, not understand, is that travel and tourism has a very large part, around 8 9 10% in the overall GDP, but practically very, very low representation in any index. So that's something which is probably likely to change in the mid to long term, right? We probably will see some of these larger hotels and airlines and other companies related to the travel and tourism industry coming into the indices because it's something which is such a large part of our GDP. So again, something to keep an eye out on for for long term investors.
Okay, got that. Let me also ask you, since you've been talking about the discretionary spend, last entire month, or so, we had already focused on a lot of consumption-oriented themes, especially led by the GST rationalization. We've also seen the government now come out, Prime Minister Modi, Finance Minister Nirmala Sitharaman, they've also come out and said that this year's Diwali sales have actually broken all sorts of records. And, this is proof that the GST rationalization has led to people also spending big when it comes to this festive season. But I want to understand, was this just a sentiment driven by festive season, or will this continue as a theme even beyond Diwali as well?
So I think uh, festive season buying happens every year.
Yeah.
This year, I think it got slightly accentuated because of the fact that this contrast effect, right? You were buying something for 100, suddenly it has come down to 90, so you feel that I'm getting it slightly cheaper. So maybe some people would have bought a little bit more. Also, some effect of the tax rationalization has come in. So I think overall monsoons have been good. So I don't think it's only just about the GST. I think it's a combination of multiple effects. Usually in economics or in economic systems, we see that it's never one thing that sort of triggers a bigger event. It's always many small things coming together in a confluence is what makes a difference. I think it's the same thing here. Multiple factors coming together, triggering the boom. Uh, Again, one thing again we have to notice is where is that boom coming? Which kind of households? My guess and my sense is that the bigger spending is coming from the affluent households. We actually have to see what is happening in the lower income households because
Correct.
unless that picks up, you will not get a full blown consumption boom.
Fair point. Taking that for sure. That's as far as the entire consumption-oriented space is concerned. Let me also just focus on a little bit of other spaces that we are watching out for. Even when we look at the primary market, the action seems that it is only going to gather more pace in the latter half of the current fiscal year. We have Lenskart IPO that will come in on October 31st. 2,100 odd crore rupees via fresh issue of shares could be raised. Again, the price band has also been fixed. It's a much awaited IPO. So the IPO market, which had already seen a lot of buzz with LG Electronics, Tata Capital, many others that also came in, Urban Company. Now you would have one more new age, company that is lining up to get listed on the stock markets. How are you looking at this opportunity, Abhishek? Do you think that this is one opportunity that investors must keep an eye out on? 382 rupees to 402 rupees per share of an IPO price band that has been announced by the company. What are the things that one should keep in mind, even though urban cities are now flush with going to lens card centers, getting their free eye vision test done, and of course trying out various AI, kind of technologies that the your brand shows that you can check out what glasses suit you best. They have also expanded to, shades as well. They're expanding to a lot of other things too. How are you looking at, lens cut as an opportunity, sir?
Uh, I made an exception on my IPO philosophy with LG, where I said that this is a company where one probably would be better off investing during the IPO or at least applying for it. I'm back to my normal sense where I think Lenskart or this kind of company, you can wait for a couple of quarters and see how it actually performs post listing, because you know uh, this is a company which has grown a lot. It's visible in front of your eyes. But we've seen the experience of Titan with Titan Eye. It's not been very or it's not been as profitable, or it's not been able to grow as fast as the management or the shareholders would have liked it to. It's not an easy business. There are a lot of mom and pop optical stores across the country, which is which serves as competition. So I would wait and watch for at least a couple of quarters. Beyond, I think Lenskart, there are also. I mean, you were talking about IPOs. There are a lot of IPOs which are sort of geared up. I've just looking through. I know ICICI Prudential, AMC is there, Pine Labs, Physics Wala, Boat. So exciting times for the primary market investors for sure.
Exciting times for the primary market investors for sure there. So we'll have to definitely keep an eye out on it. But let's also try and understand, where else are opportunities existing for everybody to look at in the secondary markets as well. We've talked about a few sectors, but beyond that as well, Abhishek, do you believe the time is right now to look at fair valuations and, of course, look at where the momentum could start to pick up? Any key themes or sectors that you are keenly looking at for the second half of this fiscal year?
So I think cement is a sector that I've been liking for a while. It had done well uh, just before, say, in the last couple of weeks or last couple of months. It's sort of been a bit subdued, probably because of the monsoons and during monsoons, construction activity, etc., drops a bit. But I think again, now that the monsoons are nearly done, cement is going to pick up once more. So that's a very interesting sector to look at. A lot of companies available still at reasonable valuations. Results that are coming out, I think Ultratech came out with their results, quite good results. I think most of the cement companies will continue to deliver good results. So that's one good area to sort of watch out for.
Okay, got that. We will definitely look at the cement basket then for opportunities going forward from here. Since we're talking commodities, are you also looking at metals, for instance, Abhishek ji? Is that a space that is looking good? A lot of technical analysts these days have been talking about how the sector is turning positive on technical parameters, and this may be the year when the precious metals rally could also fuel into hard metals. Any suggestion there?
Yeah, I mean the hidden technical analyst in me sort of suggests that metals look good, but fundamentally it is very difficult to call because it's completely demand and supply. Very difficult to figure out why and when. It's a lot of policy decisions. Some suddenly the government can come and put in ADD
Okay.
or a tax or something, and that metal can do well. Uh, Very difficult to call, but yeah, technically, most a number of these metal counters like aluminium, copper, etc. Start looks very interesting.
Okay. In fact, before we just start off to look at the markets as they open up, remember, InCred has also come out with a report on a lot of steel stocks. On sale, they have upgraded the stock to add with a target price of 158, driven by stable steel prices. InCred has also come out with a report on Tata Steel, where they have upgraded the stock to add again, raised the target prices to 224, looking at meaningfully how the stock can gain from the Europe's post-war reconstruction as war in Europe appears to be at its last stage and India business remains resilient. On JSW Steel, they have a reduced rating and a target price of 939, where they believe the stock trades at an unjustifiable valuation, by far exceeding any reasonable metric for a cyclical business. So those are the three names that have come onto the radar of InCred. But let's look at the markets where we have a positive opening, 25,837 right now for the Nifty. You have 57,700 for the Nifty Bank at this point in time. The Nifty Bank is very volatile, 2/10% higher for the Nifty. You have the Sensex also opening 1/10% higher. The mid caps are 2/10% up in trade as well. You're also looking at the small cap index opening into the green. So largely just a positive start, but let's look at the Nifty gainers. On the Nifty, you have SBI Life, Tata Steel, Sriram Finance, Reliance Industries and HCL Tech as the top movers. On the declining side, Kotak Mahindra Bank, post earnings, showing some downtick there. You're also looking at SBI Cards, 3% lower after the earnings. Dr. Reddy's is also lower in trade. We also have the earnings there. Infosys, Adani Ports, Max Health, these are the other names that are declining. But Coforge climbing up sharply right in the opening trade, 4.5% higher. SBI Life is also opening up, but SBI Cards is down in trade, at least at this point in time. Tata Steel, Tata Consumer Products opening positive, Sriram Finance opening positive, Reliance at 1464.8% higher in trade at this point in time. Bonus issue and stock split reaction for Bharat Rasayan, it's down by 7.4%, but this is optical, remember, at this point in time. Coforge further climbing up 5.5% higher. Abhishek ji, on Coforge, what do we do?
Why do you have to do anything? You don't do. If you don't have it, you don't have it. You can't buy it. If you have it, just wait and enjoy.
Okay, so if in case you have the stock, just wait and enjoy the gain. But if you don't have it, don't jump in after this 5% surge. That's the clear view that's actually coming in from Abhishek, at least for now. Vikram Engineering is also up by about 3.5%. Also, the news in focus. 1,559 advances right now to 832 declines. So the broader market breadth seems to be on a positive end. Kush Godasara now joins in, managing partner of Invest Value as well, to share with us a technical outlook on the market. First up, Kush, good morning to you. Okay, we'll just wait and go back to Kush in a bit. But 6% now higher for Coforge. It's only climbing higher, at least for now. But let's also focus on some of the other sectors. Pharma sector, Dr. Reddy's, for instance. How are you looking at that, Abhishek ji? And what would you do here post the earnings? And overall on the pharma space, what's your call for Dr. Reddy's? Let me just highlight for our viewers. Net profit came in at 1347 odd crore rupees, up by 7% on a year-on-year basis, although slightly below the estimates of the street. But we also have the company's revenue that increased by nearly 10 odd percent. Your sense, sir?
It's a decent enough results. Not great, not very, not bad. I think again the overhang of the US market is going to be there for some time. On the positive side, they have announced, that they are in the trials on the semaglutide part for India. So let's see how it plays out. Moderate results, so nothing great to comment about.
Okay, let me also just highlight for you a few more stocks that are in focus. Then technologies, meanwhile, viewers, down by about 6% in trade at 1309. So there's a sharp dip on this one in the beginning of the trade, at least at this point in time. Now, this is one stock, Abhishek ji, that had rallied pretty sharply over the last couple of months. Then technologies, it's giving up most of those gains as well. What would you say? This gain was driven by again a lot of FOMO, or do you think there's a lot of value to be had even at these levels?
See, one thing that investors in the defense sector need to understand is most of the defense companies have a very lumpy kind of results. It will not be a linear kind of results like the IT or pharma and things like that. It is by nature, project driven, delivery driven. So one quarter will be very different from the next quarter. So people should not take a quarter on quarter view. They have to take you know, a year on year view, or maybe more, maybe a rolling 3 year kind of view to actually invest in defense companies. People with short term focus, you can do a trading play, but uh, if you really want to invest in defense, in the Indian defense opportunity, you will definitely have to have a 3 to 5 year view, because these are very lumpy companies. Zen has been doing really well. Valuations are also not very expensive, uh, and quarter to quarter results will vary. I have to go through the actually what the management is saying, but overall my basic sense is that it is always going to be lumpy. So, until and unless something majorly, there's some news which I've missed. Uh, I don't see anything majorly wrong with Zen.
Okay, got that. I hope this has also given you some sense. Let's also talk about the defense space. Abhishek ji, with you. Last week, we again saw a lot of buzz on the defense space. Again, 79,000 odd crore rupees of procurement being approved by the DAC brought these stocks into focus. Today, again, PTC Industries is in focus. It's received a purchase order from the gas turbine research establishment, DRDO. So the order flows continue for this entire defense sector. But that kind of enthusiasm that we had seen probably in 2024 has been missing. So the rally sustains for 2 3 days, and again it consolidates. Is this a better way of how to see a defense story rather than an exuberance of sorts? And what should be an approach for investors at large on the defense story?
I think if you look at what is happening globally in the defense space, one thing you will immediately realize is that this is not a space where you want to play for a few days or a few weeks, even maybe a year. You want a longer term investment in defense, especially if you look at what is happening in the Indian defense space, right? Uh, the defense minister, I think last week or a week before, said that uh, the effort or the direction is towards 100% of indigenization of defense procurement in India. Now, obviously, that is going to be a stretch, because there are many things where technologically we may not be there yet. But if that is the direction, incrementally we will be moving towards more and more indigenization, which means that more and more of that huge defense procurement budget is going to be spent on Indian products in Indian companies. So the opportunity is manifold, right? It is maybe 10x, 20x from the overall profit pool that is there today. So this is not a play that you would want to take a look at with a very short term view. You want to take a look at with a longer term view, with a multi bagger kind of a mindset. That is the India part. The other big story that is there in the defense is the exports, right? If you look at Europe, what is happening? Every European country wants to expand their defense procurement budget. A lot of the countries have said that they will double their spend on defense. uh, a lot of it. I will not say a lot, but at least some part of it is going to trickle down to some of the most likely the Indian subsidiaries of European companies related to manufacturing in India. You know, so it's an ecosystem that will thrive over the next decade. So my sense would be that people should not take a very short term view.
Okay, we'll keep that in mind as well. It's 9:24, and when we look at the markets at this point in time, you're looking at IT driven by the mid cap IT names right now, 2/10% higher for the IT index. Coforge is now just holding up with that 4% move that we've been seeing. Infosys is down on the IT pack, but you have TCS, Wipro, HCL Tech, Tech Mahindra, Persistent, Emphasis, Coforge, all of them up and about, but of course, largely driven by Coforge. Big move that we have seen. Infosys, remember, ex dividend, and therefore some pressure on that one as well. Abhishek ji, between the large and the mid cap IT names, where is your focus right now?
Most likely, more on the mid cap IT side. That's where I think the action is going to be. The results are going to be better. Large cap IT, I think, will take some more time because obviously once you get to a certain scale and size, it becomes much more difficult to move the needle also. So I think mid cap IT is where one should focus on, and also where there is more variety in terms of different businesses, different focus areas, etc.
Okay, got that. Let's also take a few, takes as far as some of the sectors and other stocks are also concerned. I wanted to actually go across to understanding your view on the auto space at large and what's happening there. Auto was the first sector that started to tick higher on the back of the GST cuts. We've already had a sharp movement of 15-30% odd on several stocks in the run up to the GST cuts and even beyond now. Within the auto space, what's your current focus, sir?
I think if you look at the auto ancillaries, they are doing really well. They are picking up. That's primarily what I'm looking at. The two wheelers, four wheelers, uh, Maruti, Hyundai, M&M. Everybody has Tata Motors. All of them have said that this Diwali, this festive season, it's been a fantastic sales for them. So the entire auto pack should do well. Both two wheelers, four wheelers, ancillaries. I would probably focus a little bit more on the ancillary side, uh, but I think the entire pack is doing well.
Okay, fair point. What about Ola Electric? Have you been looking at that at all? The company's board has now approved raising of a sum of 1,500 crore rupees via various methods such as the equity shares or convertible securities, rights issue, QIP, etc. Although the stock consistently remains below the issue price of 76 odd levels, the company is expanding its visibility beyond the electric two-wheeler space into a lot of energy space as well, and newer technologies there in the power space. Any respite?
Let them come out with something where they make some money, then we'll think about it. What is the harm?
Okay.
They're not make, they're not making money anywhere. Uh, just looking at social media, I see more complaints on Ola servicing, etc. I don't honestly see too many Ola scooters and two wheelers around in Calcutta where I live. Uh, until and unless I start seeing something on the ground, then we'll take a look at it. As of now, it's more talk than anything else.
Okay, we'll stay away from Ola Electric till the time there is more numbers on the ground. And so, anything within the new age basket that has actually started to show you some strength already in the numbers, in the kind of value creation that the companies are now focused on. Remember, when these new age companies had come in, the entire debate was all around, how do we see such high valuations when the companies are either not profitable or not having sustained profits on the bottom line at all and are in cash burning stage. Come to now, when a lot of companies have turned their commentaries to focus on improving their bottom line and their EBITDAs, and how to reduce their cash burn status as well. So, how are you looking at this new age basket? Where do you see promise?
See, of all the new age companies, the best I like are eternal. I mean, that is Swiggy and Zomato. Now, if you look at the valuations of these two, these companies, you will get so scared that you will, you know, run away, really, really fast away from them. These companies, I think, if I remember correctly, top of my head, Zomato's peak profit was roughly 520, 530 crores. And today it is trading at a market cap of 3 lakh, 3 lakh 10, 20,000. Right? It's beyond comprehension in terms of valuations. But if I look at the, uh, overall business model, Swiggy and Zomato, along with their quick commerce, is something uh, which is becoming part and parcel of our lives. So it's a judgment call whether you want to really buy it or not, or whether you want to wait till the price corrects or till the profitability goes up. Uh, Very difficult, but from a business perspective, these are the two companies which I like, but which I would probably not buy.
Right. Let's actually also ask you at the same breath then, how are you looking at increased competition in the same space that Zomato and Swiggy are trading in, since these are your top bets there, from large conglomerates like Reliance, for instance, as they are now entering into a 10-minute delivery? How are you looking at deep-pocketed players now entering into the same, space too? And what does it mean then for the investors at large?
Uh, Difficult question to answer. See, basically, if you see the track record that Reliance has, uh, other than their the core, petrochemical business, and to an extent the telecom business is not great. They've not been able to scale up or do justice to the retail business at all. Not in any other business that they've got into, they've not been able to drive scale, drive profitability. Uh, so I would sort of maybe see how it plays out. Uh, Let them actually start delivering. Let them start get used by people. Uh, it's not an easy business to crack. Quick commerce is not an easy business to crack. There are other players. Amazon is trying to do that. They've tried before, they stopped. Now they're trying again. So let's see how it plays out. But uh, Blinkit, Instamart, and Zepto, they are probably the top three players now. Uh, they're not really making money. It's something which is not very easy to make money until and unless you are in the a very population dense area. So let's see how it goes. Uh, it's not very easy to say whether Reliance or Amazon or anybody else coming in has a right to win over these people who've been sort of doing this successfully, although unprofitably, for some time.
Okay, fair point. Well, we will thank you then, Abhishek ji, on that note. Thanks a lot for sharing all those wonderful insights across the board of parameters that we've discussed today. And we will, of course, catch up very soon yet again
Thank you.
with you to talk more on markets. Viewers, we'll now